Do you want to know where the correction in real estate is going to come from? You are listening to the Purpose Driven Passive Profits podcast.
Hey, accredited investors. I'm excited to announce that we have a new deal right now. It's a 49-unit building located in the horse capital of the world, Lexington, Kentucky. This is where the majority of the Kentucky Derby winning horses come from. Its rents on this building are 15% below market for renovated units in the area. To learn more, all you got to do is go to homeinvest.com or click in the link down in the description below. Always consult with a tax advisor, financial planner, or attorney before making an investment decision. Having said all that, all you have to do is go to homeinvest.com or click in the description down below.
The guy sitting next to me is Nate Armstrong. He is the founder and CEO of Home Invest. My name is Steve Warner. I am the Chief Inspiration Officer. No, I'm the Chief Investment Officer. And we are here today to show you guys what's propping up real estate right now and how this is going to switch just like that. It's already gotten started. If this is your first time listening to the show, this entire show is based on the premise of Matthew 25, and that is that we should be a conscientious investor. We shouldn't just bury our money under a rock. This is the parable of the talents. There was one guy who buried his money under a rock. The two others found good investments and doubled their money. And the master came home and said, "Well done, my good and faithful servant." That's what we're here to help you with. Today, we are jumping into one of the most debated things, but it's right now, the housing market is propped up because people say, well, there's more demand than there is supply. And we are just about ready to see that change. Nate, talk to me about a city that is making headlines right now that is probably going to lead this entire charge.
Yeah. Which city do you want to hit? I don't want to fumble this one. I don't want to be the Chief Inspiration Officer. I want to be the Chief Investment Officer.
So we're talking about New York City. There was something that just happened. Nate, you want to break that down?
Well, you spilled the beans on this last time that we were speaking on this, but New York City is banning short-term rentals, total ban, outright. And Airbnb has sued them over it, but the lawsuit was dismissed. And the courts have spoken. They're banning over 100,000 short-term rental owners right now that are about to basically be evicted from the short-term rental business because of a new law in New York City.
So let's talk about what this means for investors. Right now, nationwide, we are about 1 million homes short when it comes to the demand, people wanting new homes. We're 1 million homes short. Well, Airbnb, like here in Austin, we're over 60% down from last year. That means people that might have been making $2 or $3 grand positive last year are now negative $500, $1,000, $1,500 a month. What we just saw happen in New York said, you know what, we're done. We're banning it. Airbnb tried to sue. You heard Nate say that got thrown out of court. There's no longer Airbnb there. I think we're going to see some other cities follow suit. I've seen it around the country in some smaller cities already, in vacation towns. What does this mean for the real estate market as a whole?
Yeah, well, that the supply and demand effect, everyone keeps saying, well, the housing market can't crash, it can't go down, and it's because we're short inventory. Here's the reality. The inventory is not that far off. Just like Steve said, there's 1 million houses that are short. You can get 100,000 in New York in the next 30 days. That's 10% of it. What if we have another city do that? What if Austin, Texas, where they're down 60% in revenue on their short-term rentals year over year, what if one of those sellers that was making $6 grand a month on his short-term rental is now losing money every month? What if he lists his house for sale? And what if the next person in Austin, Texas does that because they're down 60% in revenue? It's a domino effect. We're going to see a ton of short-term rental owners rushing to the market to try to sell. It's inevitable. We're also seeing the same thing with long-term rentals. Long-term rental landlords, they're sitting in a spot now where if they try to take out debt at 7 or 8%, it doesn't cash flow anymore. How long are they going to sit on a property that doesn't cash flow? How long until they decide it's not worth the headache of making a meager return and just list the property for sale instead? So to get 1 million houses to come to the inventory scene, to get 1 million houses, is not very much. It's the snap of a finger in the terms of the housing market.
Well, let's just talk about what's the total number of houses in the US, Nate?
Yeah, 142 million is roughly. They're building houses and they're demolishing houses all the time, but 142 million is the approximate number of
So
houses.
1 million is less than 1%. We're
Yeah.
basically at like 0.7%. That is like, imagine a dam with a huge amount of water being held up by a toothpick. That's what we got right now. Like it's going to break. And what's going to happen when this changes? When demand is suddenly equal with the supply, what happens, Nate?
Yeah, well, my guess is that there's not going to be a soft landing. The visual of that toothpick breaking and then all of a sudden the dam collapsing, like that's what happened in 2008. We saw this happen. Right now, the market, there's 20% of all houses, so that 142 million houses in America, 20% of that, they're owned by investors. If you have the short-term rental investors start an exodus, we're going to have way more than 1 million properties come to the market. It could be 2, 3, 4 million. All that we need is 1 million though. And so I think what's going to happen is there's not going to be any kind of soft landing to it. It's going to be a hard landing. It's going to be a 2008 landing. And so single family houses specifically in some cities, they're going to take a beating. Prices are going to come down to adjust for it.
And now you might say, well, there's these investors, a lot of investors right now are sitting on cash on the sidelines. So they might come in and start buying some of these properties, but they're either going to have to pay all cash for them, or they're going to have to worry about going to the bank and paying 7-8% interest, which the Fed has already said they're not done raising interest rates. We're going to probably see one more bump this year, and we're probably going to see one more early next year. I don't have a crystal ball, but that is what I've heard. If you think about that, investors aren't going to be buying these houses. The key to getting these houses, if you're a single family investor, is to go make owner financed offers. If you're in multifamily, we do the same thing all day. This is why we get great multifamily deals. We've underwritten more than 600 deals this year. We're on track to do more than 1,000. The reason is it takes a lot of underwriting to find one good deal. It takes a lot of building relationships with people to get that one deal. We've gotten the last 4 deals that we've done, 5%, 4%, 3%, all owner financed and all paid dividends from day one, up to a 16% IRR with the idea of a 1.8x multiple, where you give us 100,000 and we give you a total of 180 back. It's all done because of owner financing, and that's where the opportunity is right now. When this dam breaks, when you see supply and demand even out, you're going to see prices start to come down, and eventually we're going to see way more inventory than people know what to do with. That's my prediction. Nate, any thoughts on that?
I think you're spot on, man. I couldn't have said it any better.
Awesome. Well, if you guys are listening to this and you would like information on our latest deals, we just closed out our last deal. We oversubscribed our 49-unit building. You might have heard that in the intro to this podcast. If you did, that deal is oversubscribed, but our next deal is in the pipelines. If you would like to learn about it, click on the link down below, or you can go to homeinvest.com. You'll meet with myself or Sue. Either one of us will be happy to talk to you about the deal that we are working on. Our deals tend to be fully subscribed in usually under 3 or 4 days. They fill up pretty fast. So if you'd like information, click on the link, book a call with us. We'd love to talk to you. Anything else to say before we get out of here, Nate?
I was going to just add this on the deal that's subscribed. The reason that it's subscribed so fast, and it's probably why our last 3 deals have subscribed really fast as well, is because we're locking in what you called owner financing. And it's a big thing that not many people know how to tap into. Like literally 30% of the properties in America right now are owned free and clear. How do you talk a seller into taking monthly payments on those? We know how to do that. 20% of all the mortgages are sub 4%. How do you talk a seller into letting you take over that mortgage? We know how to do that. And so that's the key advantage when partnering with us. And that's why our deals have filled up so fast. So anyways, hopefully the next one, God willing, will be the same. I'm sure it will, because we're negotiating them now. And we look forward to serving more people with that strategic advantage as we go forward.
Awesome. Guys, until next time, remember, find savvy, conscientious investments. Follow the principles of Matthew 25, and we will see you next time here on Purpose Driven Passive Profits. Thanks so much for listening to our show today. Here's Nate with our latest offering.
Hey, accredited investors, I'm excited to announce that we have a new deal right now. It's a 49-unit building located in the horse capital of the world, Lexington, Kentucky. This is where the majority of the Kentucky Derby winning horses come from. Its rents on this building are 15% below market for renovated units in the area. To learn more, all you got to do is go to homeinvest.com or click in the link down in the description below. Always consult with a tax advisor, financial planner, or attorney before making an investment decision. Having said all that, all you have to do is go to homeinvest.com or click in the description down below.
See you soon here on Purpose Driven Passive Profits.